my name is Yasmin. I recently graduated from the Shields School of Business, and I'm interested in learning more about your company. What do you do here at John Wiley & Sons?
Well, I'm the Vice President of Finance here at Wiley Canada. It means I'm responsible for basically all of the financial functions within the Canadian organization.
Okay.
So that includes payables, receivables, treasury, tax, royalties, virtually all of those functions. And Wiley is a publisher of books and journals. We publish in 3 businesses globally. We publish in the higher education arena, we publish in professional trade, and as well as STMS, which is scientific, technical, medical, and scholarly, and that's primarily journals.
Oh, all right, that's interesting. I was actually recently going through your website, and I came across your 2010 annual report. I was just glancing through, and I was wondering how, where you suggest I look to get a better idea of financial health of Wiley right now.
Well, for the most part, people like to start with the income statement.
Okay.
It's usually the easiest place to get a quick view of how a company's doing. The balance sheet and cash flow provide more long-term view. An income statement is really a reflection of 1 year, so it's good to kind of be a starting place, but the balance sheet and cash flow will give you more of a sense of where things have been and what could potentially be.
Okay. And are there specific things I should look at, or should I calculate ratios off of it, or what does your company do usually?
Well, on the income statement we would look at ratios such as profitability ratios, so like a gross margin ratio, operating income ratio. So we would look at our gross margin versus our sales to see how we're doing, and try to grow that over time. The bigger the margin, the more room we have to pay our expenses and therefore be profitable and offer our shareholders a value. From the balance sheet, we would look at current ratios, debt to equity ratio, that sort of thing. And cash flow, we're I think largely interested in free cash flow, which is essentially a measure of our operating cash after we remove our cash for capital purchases, and that's essentially what's available for acquisitions, that sort of thing.
And what about, or what would you suggest people look at if they wanted, or if they were a potential shareholder, or looking through?
They would look at the earnings per share, the price earnings, those types of things. I don't know that a price obviously is a moving target, so but you can look at earnings per share at year end in the annual report itself, and do a comparison to the industry, to just the indexes themselves.
Okay. Well, you seem to have an annual report on you right now.
I do.
Would you be able to maybe perhaps calculate or show me what you'd look at while calculating a ratio?
Sure. Let's see. Got an income statement here.
Okay.
So we could have a look at our operating income.
Okay.
And this actually spans 3 years, so you can kind of get a comparison over time of how that margin is growing or falling. In our case, revenue over 3 years has progressed favorably, and as has margin, and it's growing at a faster rate than revenue, so that's a positive thing. It also has our income per share, earnings per share, which is also growing over time as well, which is kind of an indicator of the success of the company.
Okay. No, that's very interesting. I always know that there's so much effort put into building annual reports every year and putting it out to shareholders and stuff, but clearly there's a lot of work done outside of that as well in your department. Thanks for taking the time to meet with me.
It's great to meet you.
I've got my own copy of the annual report, so I'll probably delve into it and learn more about Wiley.
Okay. Well, if you have any questions, feel free to give me a call.
Thanks.
Okay.